distinguished guests, I'm most delighted to be here today. I'd like in particular to thank Nicholas Aguzin, Amy Low, Zhihuan and Norman Chan for joining our panel today. And I also like to add my thanks to Hong Kong Land for letting us use the venue. But I will actually put my PowerPoint up on my website, okay, sometime in the next day or two. So you feel free to download. Now, Hong Kong actually has been very successful as an international financial center up to this point. Now, what we want to know is what does the future hold for Hong Kong? And I want to, first of all, start with a review of the global trends, because the world has changed over the last, certainly over the last 50 years, but even within the last 5 years, the world has changed a lot. First of all, I want to say that the center of gravity of the world economy has been shifting from North America and Europe to East Asia, and within East Asia to China in particular. And this is happening in GDP, in international trade, in wealth, and in manufacturing, and in innovation. Okay, so it's really a continuing trend. Now, you might say that, okay, there's the epidemic, but we hope that the epidemic will just be a blip if you look back, say, another 10 years. Okay. Now, the Chinese economy will be growing faster than those of North America and Europe in the next 10 years. Chinese real GDP is actually, per capita, is actually still in a range which allows the GDP to grow relatively fast. I'll show you a chart a little later. My own forecast is that by 2030, the real GDP of mainland China at market prices will reach parity with that of the US at around 30 trillion in 2021 prices. Now, the World Bank and the IMF, they've been claiming that the Chinese real GDP is actually higher than the US already, okay, based on purchasing power parity prices. But you cannot eat purchasing power parity prices, so I'm sticking with market prices. With the growth of real GDP of 6% and the national savings rate in excess of 40%, the wealth of Chinese households and institutions will be growing by leaps and bounds. It is this wealth in China that will drive the Chinese demand for assets, both domestically as well as abroad, because of the need for diversification. Now, this is comparison between 1970 and 2020. You can read, even I cannot read, but there's small print. But notice the red wedge. That means China was only 3% of world GDP in 1970. By 2020, China is almost 20%, 17, 18% of the world economy. In terms of foreign trade, you have the same situation. Less than 1% of world trade in 1970. Today is actually almost 12% of world GDP. And similarly, you can see the shrinkage of the American share and the expansion of the East Asian share. Now, this is the chart I told you about. On the vertical axis, we have the rate of growth, real rate of growth. On the horizontal axis, what we have is the per capita real GDP. Now, the red dots represent China, the yellow dots, Japan, and the blue dots, the United States. Now, what you can see is that within the range of China, per capita GDP is now within the range between 10 and 20,000 US dollars. Okay? But you can see in this range, look at the yellow dots and the blue dots. They're actually quite high. And average, certainly average would be around 6%. So that's really why I said that China can no longer grow at 9 and 10% per annum. Okay? Those days are over, but it can continue to grow at around 6% per annum on average over the next, say, a decade or so. Now, this is another interesting chart. On the upper side, I have the savings rate of China, and the blue line is the savings rate of the United States, national savings rate. you can see the Chinese savings rate is over 40%, and the US savings rate is below 20%. Okay, all you have to do is ask yourself, if you save 40% and your neighbor only save 20%, what happens 10 years later? Right? You'll be vastly wealthier than your neighbor. Okay, so this is actually what's going to happen. Now, the other thing I want to say is that from various reported surveys, Hurun, Forbes, and so forth, we know that there are supposedly more than 600 known US dollar billionaires in China, supposed to be more than the number in the United States. These are known billionaires. There may be many more unknown US dollar billionaires in China. And over the past decade, many successful Chinese enterprises have emerged. In the 2022 Global 500, Fortune Global 500 survey, there were 145 Chinese enterprises compared to 124 US enterprises. Okay, this shows how far China has become over the years. Now, the capital needs of these Chinese enterprises will provide the basis for the supply of both equity and debt securities in the Hong Kong capital market. China has also recently become the top country in terms of the total number of the top 1% most frequently cited scientific and engineering articles published by its nationals. This is just recently. Okay, now this shows that in terms of innovation, China is also beginning to come into its own, because it's no longer just a copycat, just imitation, and is coming there. And so it's on the verge of a breakthrough in innovation and technology. There will be many startups in China, and of course also many failures resulting therefrom. But I think a small number will manage to become unicorns, okay, which is also the case in the US. Okay, you have many failures, but this provides the basis for Hong Kong, Shenzhen, and the Greater Bay Area to become the venture capital and startup hub for China and East Asia. The vast Chinese market attracts entrepreneurs, innovators, and venture capitalists because of its economies of scale. Okay, that's why Hong Kong can never make it on its own as a venture capital hub, but Hong Kong, with the mainland, with Shenzhen, can actually become a major startup and innovation hub. Okay, now the next trend I'd like to look at is the China-US strategic competition. Okay, we have to accept the fact that this will be the new normal for the coming 10 years. Okay, the decoupling of the Chinese and US economies, including the capital markets, to a certain extent, is inevitable. Okay, we have to accept the fact. Maybe it'll get better after 10 years, but we have to accept the fact that some decoupling is inevitable. It will bring challenges as well as opportunities to Hong Kong, for example, through the repatriation of Chinese enterprises currently listed abroad. I mean, we read that 5 large Chinese enterprises have delisted from New York, and most likely, if they don't have a listing in Hong Kong already, they will have a secondary listing in Hong Kong very soon. Hong Kong can also intensify its collaboration and cooperation with continental Europe. To the continental European countries, China is viewed as the most important customer, not a competitor. The China-US strategic competition will also accelerate the use of the renminbi as an international medium of exchange. Okay, that is also inevitable. Now, let me talk a little bit about renminbi internationalization. Renminbi has been current account convertible since 1994. That means you can spend any amount buying and selling, and there's no problem. Okay, but there are restrictions on capital flow still. Okay, and that actually gives Hong Kong a slight advantage in the sense that we don't have any capital control. But I want to say this following. 10 years ago, or slightly more than 10 years ago, China settles all of its international transactions in the US dollar. Okay? But today, that has changed. Okay? And this is because if you really think about it, own currency settlement between two countries is always better because it reduces the transactions cost. You don't need to change your currency into dollar and dollar again to another currency, and it reduces the exchange rate risk. Okay, so if countries can trust each other's currency, it's always better to do it in their own currency. Okay, and that is really happening. More and more countries have entered into own currency settlement agreements with China. For example, Indonesia and of course Russia. Russia doesn't have too many choices. But they settle their international transactions with China in renminbi and their own currencies. Thus, what would happen eventually is that households and institutions in these countries, they will hold significant renminbi balances. Okay, especially if they run a surplus in trade vis-a-vis China. Now, if you think about infrastructural projects in ASEAN and Belt and Road countries that use Chinese contractors and equipment, they will require renminbi financing. And this can be done through renminbi-denominated bonds in Hong Kong, bought and sold in Hong Kong in renminbi. Hong Kong is clearly the global center for offshore renminbi. Now, this chart shows you the renminbi share of renminbi settlement in China's foreign transactions. You can see it reached a peak around 2015. Then because of a sudden drop in the renminbi, people stopped doing it. And it took a little while to recover. But this is now actually up to around 40%, holding steady around 40%. It might actually increase some more in the future. This other chart is also interesting. The red columns are the share of world trade in 2020. Okay, and you can see that the blue column is the share of world settlement in that particular currency. The first two columns refer to the US. You see, even though the US share of world trade is around 11, 12%, its share of world settlement is 40%. That means plenty of third countries, they settle in US dollars. Okay. Now the second country is the Eurozone. You can see the Eurozone itself, they account for about a quarter of world trade. And they also have other countries settling in euro. Okay, so they're hitting above. Now if you look at China, Chinese trade share is actually higher than the US, the red column to the fifth. But China, the renminbi only accounts for 2% of world settlement. Okay. Well, what this says is that there's plenty of room for the increase of use of renminbi in world settlement. And it will actually occur gradually and increasingly. Okay. Now, now, we know the following is true. The Hong Kong dollar and the renminbi, they circulate freely and widely in Macau, okay, even though neither one of them is legal tender. You cannot use Hong Kong dollar or renminbi to pay fines or taxes in Macau. You have to use the Macanese pataka, but other than that, I think all the shops in Macau, all the casinos, they'll be happy to accept your Hong Kong dollar or your renminbi, okay, and perhaps even the US, the greenbacks, okay. But I think within the Greater Bay Area, it is expected that the Hong Kong dollar, the Macanese pataka, and the Chinese yuan will circulate in parallel. Okay, I mean that's what makes it a region, a Greater Bay Area, is to have circulation of all three currencies. However, these three currencies will remain the sole legal tender in the respectively Hong Kong, Macau, and the GBA, Hong Kong and Macau. Now, the direct use of the renminbi in Hong Kong capital markets should not only be allowed but also facilitated, given the significant offshore renminbi deposits in Hong Kong financial institutions. We have to allow people to use them to purchase goods and services, but more importantly, to purchase securities. Okay? And we can always settle using the closing rate of the day. Similarly, it should be possible for us to buy and sell securities on the Shenzhen Stock Exchange with the Hong Kong dollar. We're all in the same Greater Bay Area. Again, settlement at the closing exchange rate. Now, with the introduction of the digital central bank currencies, I'm a big fan of central bank currencies. The ECNY and EHKD, I think parallel circulation of two currencies should not pose any serious problem. Now, I don't have time to talk about the multipolarization of the world as well as the COVID-19 epidemic. So we'll find another time to discuss this. But I want to go back to say what are the Hong Kong strengths and weaknesses. Now, this is a topic that many people have talked about. I won't spend any time on it. But I want to say the following. First of all, the fixed Hong Kong dollar US peg used to be an anchor for the Hong Kong economy. It was from the mid-'80s up to now. But it could become its Achilles heel because of potential US sanctions. Okay, I'm not saying that it's coming, but it's possible. But what is Hong Kong's unique and most important comparative advantage? It is really the confluence of the large demand and large supply of assets emanating from the mainland. Okay. Already, mainland enterprises account for more than half of the annual IPO volume and turnover on the Hong Kong Stock Exchange. The wealth of mainland China provides the backstop for Hong Kong as an international financial center. Moreover, the wealth holders on the mainland, they need to diversify their portfolios by geography, and Hong Kong can provide an easy way to accomplish it. What about potential competitors? I'm running out of time, so I'll be very brief. Singapore has neither the standby buying power nor the supply. All right, so that means it cannot really be a very effective competitor. Saudi Arabia and UAE, they have lots of buying power, but they cannot provide the supply. You can buy Saudi Aramco, but that's about all you can buy on the Riyadh exchange. Tokyo actually is the only city in Asia that actually potentially have both the demand and the supply. But Tokyo does not seem to want to become an international financial center. If it wanted to be, it could have become some time ago. And Japan also doesn't want, for many reasons, the yen to become a significant international medium of exchange. All right. Shanghai is a potential competitor to Hong Kong, but China is actually large enough. I've always claimed that to have two or even more financial centers. It's a big place. Okay. So there should be an appropriate division of labor between Hong Kong and Shanghai. And finally, both Hong Kong and Shenzhen are part of the Greater Bay Area, and their economies complement each other. They should intensify the collaboration and cooperation. Perhaps one day, the two stock exchanges can merge into a single entity. Okay. Now, I want to say some directions for future expansion, just a few. I'm sure that the distinguished panelists will actually suggest many other possible directions. First of all, the Hong Kong Stock Exchange tried to expand its geographical footprint and selectively recruit successful enterprises outside China and Hong Kong for a secondary listing. Okay, I think secondary listing much easier. Don't try to go for a primary listing. Okay, Saudi Aramco, Airbus, Samsung, Apple are some possibilities. Hong Kong actually badly needs to develop a deep, wide, and liquid long-term fixed income market in both Hong Kong dollars and renminbi. I'm sure Mr. Guzin realizes this. It's not easy to do, but you have to do it to be complete. Both the demand and supply of renminbi-denominated bonds should be rising over time. Renminbi-denominated infrastructure and green bonds issued by the mainland central and local governments and by ASEAN and Belt and Road countries should be well received in Hong Kong. Finally, I think on the basis of the enormous backstop wealth of the mainland, Hong Kong has the potential of becoming one of the few global reinsurance centers. Concluding remarks. The future of Hong Kong as an international financial center is excellent, with the buying power of the Chinese investors on the demand side and the successful Chinese enterprise on the supply side. Hong Kong Stock Exchange cannot help but prosper. Hong Kong should capitalize on the fact that it is a global center for offshore renminbi. Finally, the economies of Hong Kong and Shenzhen together, I think, can eventually rival the success of Silicon Valley, Route 128, and NASDAQ combined in the US. Thank you very much.